This is the Regal Imports News for April 2015. The Governor of the Bank of Canada, Stephen Poloz, has just commented on the state of the Canadian economy, saying that first quarter statistics will be, and I quote, atrocious. So no matter what I say, this news broadcast can only get better after that negative sentiment. I'll start by stealing a line from Joan Rivers. Can we talk? IDEX has been claiming that polished prices have been consistently rising over the past few months. Rappaport, on the other hand, says that prices are going down and they have lowered their price list across the board. Polished Prices Diamond Index is currently 10.5% lower than this time last year and has lost 1.3% since the start of 2015. Who is correct actually depends on the accuracy of the testing sample. However, neither Rappaport nor IDEX are willing to disclose their methodology. Philippe Mellier, Chief Executive Officer of De Beers, is painting a glowing picture of the diamond market, and his voice seems to be the only voice proclaiming that everything is great and prophesizing that all will be well. But for some strange reason, diamond manufacturers are losing money and retailers are just not feeling good about diamonds. The whole mood of the diamond industry is down, and it feels as though our industry is missing the boat. Christmas for diamonds was a disappointment. The Hong Kong show was quiet, and China is slowing down. The new Rappaport Diamond Show in Basel was empty, and even the main Basel show had little to no diamond sales. Israel's polished diamond exports dropped almost 30% in the first quarter, and in the United States, which is not known for diamond cutting, February saw more diamond exports than imports. No one in the pipeline is excited about diamonds except miners who are choking manufacturers with rough diamonds and making record profits. There is talk about a petition that was circulated and ended in a failed attempt by De Beers site holders to boycott the April site. Apparently it was foiled with a few direct calls from De Beers. The site brought $700 million worth of diamonds to the table, and over 30%, or 200 million, was rejected. There has been many deferrals over the past several sites, and now 30% rejection. It makes me think, how much can be deferred or rejected before a site holder is rejected? It is impossible that De Beers does not understand what is happening, and yet Mr. Mellier is globetrotting and giving positive state-of-the-industry interviews to anyone and everyone who will listen. Martin Rappaport gave a stern warning in his market comments, stating that the $700 million site is destabilizing the market, and he advises the trade to buy polished instead of rough. Des Kalali, a diamond market analyst for Royal Bank Capital Markets, warns that producers and traders should be more cognizant of selling according to demand. Supply must adapt to demand. It all boils down to a discrepancy between De Beers' market assessment and the sentiment in the real market. De Beers maintains that it is business as usual, while industry is screaming that business is anything but usual. Is there anyone listening? Is there anyone in the mining industry that cares about the health of the overall diamond business? De Beers are predicting that polished diamond prices will rebound as the market adapts to the overstocking that they have forced upon their customers. Mr. Mellier said in an interview with Bloomberg, quote, "Now we think that polished prices have bottomed and rough prices have also bottomed," end of quote. What does this mean in mining speak? It means that De Beers plans to keep raising prices. It is my humble opinion that the bounce back in prices that De Beers is predicting will be what the stock market refers to as a dead cat bounce. How does a dead cat bounce? It doesn't. There is a glut of diamonds at all levels. Diamond manufacturers are decreasing production. The lack of business at the shows means that wholesalers have too much inventory and retailers are not looking to restock. As we move into what is traditionally a slow second quarter, I have attempted to conduct a very informal poll of my customers and have found that few are excited about the upcoming Vegas show. Statistics show an increased rate of jewelry store closures in North America. Individual companies are not going bankrupt, they just seem to have had enough and are phasing out. According to figures from the U.S. Board of Trade, the number of jewelry stores dropped by 2.1% over the last year and 21% since 2007. My question is, are these closures the result of a change in consumer sentiment? Eden Golan finds that consumers are still interested in jewelry, but that statistics are telling him that we are going through a period of lower interest in diamond jewelry. He says that the bottom line calls for heavy investment in marketing. I believe the discount marketing model that is so prominent in the United States has contributed to a depreciated image of diamonds. IDEX pointed out that U.S. consumers did not react favorably to Christmas price-based promotions. I really can't see how any consumer can trust an industry that offers unsubstantiated discounts on diamonds of up to 80%. However, I've already traveled down this road too many times. There were several very interesting and very relevant developments over the past month. The first has to be the failed attempt to organize a rebellion by De Beers site holders. But running a close second has to be the reaction of larger Indian and Israeli diamond cutters to the changes in the Rappaport list. Indian and Israeli dealers have organized and are listing their diamonds on RapNet at full list price. They don't agree with Rappaport pricing methodology. They believe that the sweeping changes are too general. They feel that when their clients see their diamonds at full list price on RapNet, they will go direct for accurate pricing. The effect of so many major dealers listing without discounts will skew the statistical information provided by RapNet. It will be very interesting to see how this action affects RapNet and the Rappaport list going forward. I believe that such strong reactions are the result of serious problems in calculating price changes, and if followed to resolution could result in positive change. Something mysterious happened a few weeks ago. A secretive meeting took place in the London diamond offices of Rio Tinto. A group of prominent diamond miners, referring to themselves as the Diamond Association, including representatives from De Beers, El Rosa, Rio Tinto, Gem Diamonds, Lucara Diamond Corporation, Dominion Diamond Corporation, Luck Oil, Grib Diamonds, and Petra Diamonds, all were participants. The official statement following the private meeting is as follows, quote, "Primary discussions have been held between a number of producers to explore the potential remit and scope of an industry association for diamonds that would seek to better understand, address, and protect the needs of diamond consumers. These discussions are at an early stage and covered a variety of topics," end of quote. The association stressed that this initiative has nothing to do with regulating rough diamond prices. No one wants to go down that road again. Their initial operating budget is $6 million, which is rather meager when compared to the $200 million that De Beers appropriates to the promotion of Forevermark. My earlier comment about industry missing the boat is my initial response to this late, underfinanced, unfocused, and non-inclusive association of a group of miners that control over 70% of the world's supply of rough diamonds. Sorry for my lack of enthusiasm. And that's the Regal Imports news for this month, and I thank you very much for watching.